Hello everyone, welcome to today's webinar, Sole Traders versus Limited Company. My name is Aidan Corcoran and there's been a large increase in attendees now, so I'm just going to get started, and if anyone joins late then they can just join at that point. So first of all, just a little bit of an introduction about myself. I am Aidan, as I've just mentioned. I've joined GoSimpleTax recently, within the last 12 months. I'm a personal tax senior and I've previously been in practice, so I've joined GoSimpleTax basically to help out on support desk and do webinars with partners. And basically I aim to develop the services here as well. Since I've joined, we've started doing tax reviews, and that's just one of the many services that we are looking to introduce in the future. GoSimpleTax, on the other hand, is a UK-based software. It's HMRC registered. If you do go onto HMRC and look at the list, I believe we are at the top. And it's primarily for sole traders, not sole traders, sorry, self-assessment for individuals and partnerships. We don't actually support company submissions. So leave a little, I'll let you read that for a few more seconds while I just grab a drink and then we'll move on to the actual presentation. Okay, so what we're going to talk about today. So we're going to talk about what are the differences between sole trade and limited companies, getting set up, reporting requirements, advantages and disadvantages, change of rules from April 2023. Is it still worth being a limited company? IR35 implications, overview of the GoSimpleTax software, and then we're going to have a live Q&A to finish off with. So what are the differences? So as a sole trader, you and your business are the same legal entity. You're taxed on all profits regardless of whether you actually take the money out of the business to use it personally. You literally are just as the same legal entity is seen. Any income that comes in, you'll be getting taxed as it is basically your money. Tax by self-assessment at the usual rates of 20, 40 and 45%. National insurance is class 2 and class 4. There's no legal requirement to submit any annual accounts, but you must keep records. And you're free to borrow from the business bank account as it is your money and your account. On the other hand, though, you and your company are not the same legal entity. You'll find it very difficult to come to personal harm if being sued. The only times that you will actually come to personal harm is if you are doing something illegal, such as being fraudulent. So yeah, you're pretty much covered, basically seeing your limited company as a wrapper, and whatever in that wrapper can be sued for, and then anything outside of it, so anything personal, should be sheltered from that, unless, as I say, you are doing something that isn't right. You've got the flexibility of withdrawing money and being taxed on it when it leaves the company. Quite the opposite really is the sole trade, so you're being taxed on everything, so you've not really got the flexibility of how much tax you can pay, but you've got the flexibility of touching into the money all the time as a sole trader. Whereas limited company, whatever money is in that limited company, you can't go in there and take it as you please. You actually need to draw it out of the company, either by salary, interest or dividends, or any other manner that you may see, such as benefits or something of the sort. Corporation tax return is taxed at 19%, so your company profits are taxed at 19%. And if you take out a salary over the rates, you'll have class 1 national insurance to pay. You're legally required to submit annual accounts to HMRC and Companies House and all the shareholders. And if you start borrowing from the business bank account, this could lead to additional charges such as Section 455, interest on loans, and also benefits in kind from loans as well. Moving on to getting set up, you can see that the two processes are quite different. One being much simpler, being the sole trade, and the limited company being a bit more in depth. So the sole trade process takes about 15 minutes. There's no cost when registering. There are three ways that you can register as sole trader. That's an online form, a postal form, or a telephone call to HMRC. You must register with HMRC once your income exceeds £1,000 in a given tax year. That's because they introduced the trading allowance for those people that basically had side hobbies alongside their main job where they were earning under £1,000. I think they did some sort of research and found that the majority of people who did have a side income was earning less than £1,000. When registering, you need details such as full name, address, date of birth, NI number, and reason for registering. Quite straightforward in comparison to what you'll see a little bit later on the limited company side. And as I mentioned a little bit earlier, even if the income source is a hobby, such as eBay selling, you're still required to register once your income goes over that £1,000. You can't literally avoid self-assessment just because you've got a main job and your secondary job is not considered your main thing. So you could be earning the exact same amount of money and some people could still consider it a hobby, and then they think that they avoid actually registering for self-assessment when that's not the case. It's once your turnover or income exceeds that £1,000 allowance of trading. Onto the limited company side. This process is a little bit more involved as you need to register for Companies House first and also with HMRC for corporation tax. When registering your limited company, you have to pay £12 or £40 depending whether you do it online or by post respectively. You must register for corporation tax within 3 months of starting trading with HMRC. That basically means that you can incorporate your company or incorporate your company, with Companies House, and technically you don't have to start trading straight away. So if there is a delay, then once you start to trade, within 3 months, you need to notify HMRC of that. Some key details and personal details which are required when registering. You'll need the company name, details of directors and company secretarial, any details of the shareholders and also the share structure. You need to identify individuals with significant control whilst you're incorporating as well. Prepare documents on how to run the company. Understand what records you'll need to keep, and also detail a registered office which is available to the public. As well as that is just solely for the limited company. You will also need to do the sole trade information for each of the directors if they need to register for self-assessment as well. So not only does it take the 15-minute process that the sole trade does, you've also got this lengthy process of creating the actual limited company, which from my experience previous, usually takes between 45 minutes if you know what you're doing, and it's quite an easy structure, up to a couple of hours to a few hours if it's a quite detailed structure. So in terms of actual time of getting set up, sole trade is the way forward, unless we'll see later down the line if it's more beneficial to set up as a limited company. So reporting requirements. Compulsory for sole trade, you have got your personal tax return, SA 100, along with all the other schedules, which is due 31st of January following the end of the tax year. You've got your tax payment, which is also due on the 31st of January following the tax year. And then following some registrations, you may have payroll, RTI submissions, usually, well, it is per period, so either weekly or monthly. And you've also have your VAT returns, whether that's quarterly VAT or annual VAT if you join the annual scheme. So they are pretty much what you would expect to report whilst being a sole trader. And on the other hand, for a limited company, you've got annual accounts 9 months after year end. You've got confirmation statement, anniversary of incorporation, event-based filings such as any changes to the structure or dividends or anything of the sort. They need to be filed to Companies House. Corporation tax return CT600, that's due 12 months after the year end. And you also got your corporation tax payment 9 months after year end. As well as the personal tax returns for the directors, which is same as the sole trade side again. So as you can see, there's quite a bit more paperwork involved for a limited company. And sometimes people look at the savings in terms of tax from a limited company and say, is it actually worth it considering the additional amount of admin involved? Which we'll go on to later on when we're looking at the advantages and disadvantages. But I thought I'd just throw it in there now. And then following registration, once again, you've got payroll and VAT returns. Also on there, you will have P11Ds, benefit in kinds for a limited company, if you have those as well. So there's another thing that needs looking at if you do provide the benefits in kind. So advantages for a sole trader and limited company. You'll basically see list of advantages for both. We'll go on to disadvantages and it'll practically be the same list but opposite, if you know what I mean. So let's just flick through these. So far we've seen that sole traders are much easier to set up. There's less admin involved. There's more privacy because it's not available to the public. Easily change business structure because it's not reported anywhere. You can just decide what you want and when you want. Full control of the sole trade. Usually you come from an employment background, you have an idea and you set up as a sole trader, therefore you've got full control of what you're doing rather than following someone else. You can offer a personal touch if you are taking on a job that you're seen as the person, because it will be Aidan Corcoran trading as whatever you want to be trading as. So it's more of a personal touch when getting in touch with people, rather than a limited company being this perception of a big building with loads of people involved, when we both know that might not be the case. And minimal paperwork and record keeping requirements in comparison to the limited company. And there's no need to maintain a registered office. As mentioned, that is available to the public, and that's where it gets intertwined with the you've got more privacy as a sole trader. You've got fewer restrictions when choosing a business name, and losses used. So basically, when you get losses, it can be used against other income, whereas a limited company's losses is restricted to that group or that limited company itself. You can't actually benefit from them losses personally like you can with a sole trade. On the other hand, advantages: minimises personal liability as you are a separate legal entity. Yep, we've mentioned that before. Profit extraction can be more tax efficient. You're not being taxed on everything as and when you earn it. So yes, that's another advantage for a limited company. Could be more appealing to customers as they are more credible and could have more trust. Them details usually are on company's house. If anything goes wrong, they've got the details there to report you. Whereas a sole trade, you're not reported anywhere, so you could literally or potentially disappear and the customer not hear from you again. So it could be a little bit more credible, and you may have more trust in hiring or paying for a limited company. Once you've registered the company name, nobody else can have that name. Pension contributions are more tax beneficial for the company than they would be for a sole trader. It's easy to plan for the future with the shares and the structure of the company. If you've got children or grandchildren that you want to introduce into the company, you can easily plan for that, whereas sole trade would be a completely different kettle of fish, so to say. If you are introducing somebody in, then it's no longer a sole trade. It becomes a partnership, and therefore you then need to familiarise yourself with the partnership rules. And as a limited company, you may be seen as more professional than a sole trade because you've got that perception of them big buildings of what a limited company is. Just flick back there, let you digest that a little bit. And whilst we do that, I'm just going to stick on a poll. So how do you currently complete your self-assessment tax return? So you've got HMRC portal, paper return, accountant, GoSimpleTax software or other digital software. So if you just start ticking, I believe it just pops up on your screen as a tick box. Yeah, people have started to do it. So I'll just hold on for a few seconds, grab myself a drink, rehydrate, and we can proceed in a minute. There's 13 attendants. Let's see who's voted here now. There or thereabouts, pretty much everyone's voted. So a few more seconds and then I'll just publish the results. I believe they'll pop up on your screen and you can just see how other people are currently completing their self-assessment tax return. So we've got joint top at HMRC portal and the accountant options, and then you've got joint second, so to say, or would it be joint third, at paper return, GoSimpleTax software and other digital software have all got the same amount of votes as well. So thank you for voting on that, and we shall move on now to the disadvantages. So as I mentioned, it's going to be that same list as what we've just done, but basically the opposites. So for a sole trade, you're the same legal entity as your business, therefore you could potentially have that debt liability if someone was to sue. It could be more difficult to get financing if you've struggled in the past. You could have less free time. You're a sole trader, you're doing it all yourself. Therefore, you're trying to make it work. You are basically putting in the extra hours. Lack of flexibility with your tax bill. Any profits that you've got will be taxed, regardless of whether you've touched them and used them personally or not. Potentially not as appealing to customers as a limited company. Once again, that perception of a big building of a limited company, a sole trader doesn't quite have that. So it's not as appealing. On the other hand, cost to set up and takes longer. As you know, that the sole trade, literally, I mentioned, takes 5 minutes and 15 minutes and is free. Whereas a limited company, you've got all the different registrations and all the different information that you need to provide. Lots of admin with numerous admin requirements. We've mentioned that previous. Less privacy as information is available on Companies House, mentioned that. Any changes to business structure must be reported, whereas, as we mentioned, sole trade, you have to do that. It's less attractive to customers that want a personal experience. I did mention that it can work for you in your favour and against you, basically. So as a sole trade, it can be good because it's more of a personalised experience. On the other hand, you could be seen as not appealing because you are just a sole trader, a single person, rather than being represented by a big company of perception, so to say. Must have a registered office which is open to public viewing online, and you're restricted when choosing a business name if someone has already got your business name elsewhere in the country. You've got considerations of IR35, which we'll touch on a little bit later on. And it's more complex when using things for private use, as you will touch on them, benefits in kind, P11Ds, P11DB, and then that was the additional reporting requirement following registration that we mentioned earlier. So as you can see here, disadvantages in terms of what's what. We've got 5 for a sole trade, and we've got 1, 2, 3, 4, 5, 6, 7, 8. Is it 9? Yeah, 9 for a limited company. So yes, you can benefit in some ways from a limited company, but in terms of taking a step back and looking at it for your business, is it actually worth it, considering there's so many more disadvantages on certain fronts. So from 2023 April, we've got some tax rule changes for both sole trade and limited company. Sole traders, we've got Making Tax Digital. Anybody with income over £10,000 will basically fall into the Making Tax Digital regime. Rather than the single tax return, you've now got 5 returns to be submitting. So you've got your quarterly tax returns, well, not tax returns, quarterly submissions of MTD, along with an EOPS, which is an end of period statement, which basically includes then the adjustments for the year. Pilot schemes now available. If you are a sole trader and are interested in getting on board with this quickly, then it's a soft pilot, so there's no penalties. It's voluntary, so you just have to go online, type in MTD for income tax pilot scheme, and you'll be able to register if you qualify. To qualify, you basically need to be UK resident, already doing self-assessment, and up to date with your tax returns and payments. And there'll be no self-assessment tax return anymore. This will be replaced by a final declaration. And then just reiterating that it will be quarterly reporting. You can do that more often if you wish, but there is a legal requirement to be doing quarterly reporting. So anybody who is a sole trader at the moment and is getting away with the 1 submissions a year for your tax return, this is something that you need to be proactive with, and GoSimpleTax is here to help for that. We will be completely MTD compliant when it comes in, and it will be very straightforward in terms of getting them submissions in. So when I have my questions later on, ask me any questions on that, and I'm sure I'll be able to help. On the other hand, tax rule changes from April 2023 for limited companies. You've got the return to small profits rate and main rate. Basically, tax rate increases dependent on profits. So you've got profits up to £50,000 are taxed at 19%. Profits from 50,000 to 250,000 are taxed at an effective rate of 26.5%. I've asterisked that, I'll come to that later. And then profits above 250,000 are taxed at 25%. So it is not actually as tax beneficial anymore to be a limited company if you are earning over £50,000 in profits. So what I asterisked a little bit earlier, I've got that effective rate of tax. So illustrated below, we've got the first 50,000 taxed at 19%, gives a tax liability of 9,500. The next 200,000 is then taxed at 26.5%, because effectively over the course of that 250,000, you are then taxed at 25%. Therefore, it is quite an inflation following that first 50,000 in a tax rate of 7.5%. Let's go to some examples on that. So we've got sole trader currently, so in this tax year 21-22, you've got profit of 30,000, you get net income of 24,516. Profit of 50, you get 38,717. Profit of 100,000, you get 67,752. And profit of 150,000, you get 91,723. In comparison to that limited company currently, you've got profit of 30,000, you've got net income of 25,124. That's a difference in favour of limited company of £608. For profit of £50,000, you've got, it's better off as a limited company of 1,392. Profit of 100,000, the difference is 1,717, and profit of 150,000, the difference is 334. So, as everybody pretty much well knows, once you get to that 45, 50,000 profit mark, all the way up to 125,000, 100,000, it is more beneficial to be a limited company currently. Everyone should know that, just for the sheer fact of the flexibility and being taxed. You can basically take a small salary with no tax and no NI, and then take the rest in dividends, which are at a lower rate than sole trade. However, following a couple of rule changes, so we've got the increase in national insurance and dividend tax from April 2022, which affects both sole trade and limited company, but we also have the increased tax rates for the limited companies. We can now have a look at what the damage is there. So As you can see, what you'll see from currently to post April 2023 is all of the sole trade income will come down slightly due to the increase in NI. So just looking there, you've got £250 between the 30 grand profit, you've got £500 for the 50 grand profit, and then it starts going into bigger numbers and the difference between. However, with the limited company, let's have a little look there. So £30,000 profit, pretty much similar to the current comparison. We've got £50,000 goes up, but then £100,000, we've got a difference of £13 and profits of £150,000. It's actually better off now to be a sole trader by £2,400 than a limited company. Yes, £150,000 is a big profit, but when when we look at the comparison on the limited company side of the differences, you can see that from £50,000 to £100,000, you've got a good difference there in comparison to the sole trade. Whereas when you're looking underneath post April 2023, that's £720. Yes, you are better off being a limited company, but don't forget you have got all them additional admin responsibilities of filing accounts, filing each time there's some sort of business change. You've got to do the CT 600 as well as the SA 100 returns as well. So when if you were to go and get a quote off an accountant for the cost of a sole trade, and then go and get the cost of an accountant for a limited company, the difference will probably be around about £720. So with all the additional stress of filing the additional things and getting all that information to the accountant, the question is it actually worth it? And dependent on what your profit is, if it's around the 50 grand mark, then yes, it might be worth it, but not if you're on the profit mark of £30,000, or not if you're going up towards the £80,000, £100,000 mark. That £13, you're actually worse off once you take into account your accountancy fees. So just backing up these calculations, I've basically assumed that all the profits are extracted from the business. The salary is up to the secondary threshold of 8840. Tax rate used at 2122, and then for post April, 2122, but including the new NIC dividend and limited tax rates. So it's just basically food for thought. Previously, once you're in that 40k to 100k, 110k bracket, it's always been better for a limited company. But going forward, it might be looking at some sort of tax planning with your accountant or with a tax advisor and saying, am I actually better off being a limited company going forward? Because in my professional opinion, I'd say potentially not. The admin and the reporting requirements definitely outweigh the fact of the £13 or the £720 tax benefits, or tax saving benefits, should I say. So hopefully that's a bit of something to think about. And whilst we're thinking about that, we'll move on to IR35. So what is it? IR35 is basically tax legislation that's designed to stop individuals taking a step out of employment, incorporating as a limited company, and then basically being an employee for someone as a limited company. That is basically bread and butter stuff. That's what it is. So inside IR35 is a contract for service, which is basically off payroll working, and therefore you should be taxed as an employee. So if you are a limited company and you should be taxed as an employee, then you are classed as inside IR35, and then you will have a deemed payment calculation at the end of the tax year, which can be complex, depending on how much you've paid yourself, what pension contributions you've done, what NI you've paid, what NI you haven't paid. And basically, you have to stand there or sit there and do a calculation yourself to calculate if you were an employee, effectively, what would you have paid? And then you've got to pay a balancing charge, basically. And you've got outside IR35, which is a contract of service. And seen as genuinely self-employed, and you can pay yourself in the more tax efficient way as you do as a limited company. Your contract is likely to include details of the services you'll be providing and when you'll be working, but it won't include demands from the client's point of view, such as performance monitoring or appraisals. That is basically the difference of outside and inside IR35. Outside IR35 is it's your contract, you're choosing what you do, and inside IR35 is basically saying you're going to a company, they're telling you what to do, and your performance will be monitored. So yeah, it's pretty much the difference between the two. If you offer your services rather than a contract for a service, then you're likely to fall outside of IR35, as you could send someone else to do your work for you. Whereas inside IR35, they'll specifically want you, and therefore you're a bit stuck in the IR35 restrictions there. So how is it changing? Up until April 2021, contractors working in the private sector were able to decide whether they fall inside or outside. Whereas from this date on, the responsibility now rides with the person passing the contract. So effectively the employer or the business wanting the services. And typically this will be the client, or when involved, the recruitment agency. So if you have a recruitment agency, they will decide for you if it's inside or outside IR35. IR35 doesn't apply to sole traders, so that could be another benefit of a sole trade there. Only contractors working through their own limited company, which are often referred to as personal service companies, PSCs. HMRC stance on it. So there's basically a tool online called the Check Employment Status for Tax tool, mouthful I know, also known as the CEST, which is a fairly detailed test which you basically have to give all your information to regarding the contract, and it will come out at the end of it saying either you are inside or outside IR35. Whether that is the correct stance or not, HMRC can still challenge this, even though it's their tool and their tool has told you whether you are or aren't. It's more about the validity. Sorry, I can't spit that out then. The validity of information that you've put in that tool. So you could literally have a contract, put the complete opposite in the CEST tool to make sure it's outside of IR35, and then when HMRC look at it, they go, actually no, from what that contract says, that should be inside. Let's have a look at what you put in the CEST tool. Oh, well, you've lied, so therefore we can challenge that. So although it is there to help people, if you're not putting the correct information in, then it's HMRC can always challenge it. Hopefully that details or outlines IR35 for you. Now on to GoSimpleTax. So it's a little demonstration of screenshots of GoSimpleTax, what to expect from the user interface, and just some of the cool features that it has. So we'll go on from there. So this is on my account. I've screenshotted that I've clicked new page, which is down the left hand side, and I'm choosing self-employed SA 103 pages. You click that and you've basically got a screen asking you to include your business name, business type, address, a few other details a bit further down, such as period, start and end date, and if there's any losses brought forward. Once you've created the actual page, you'll be confronted with something like this. You can either press income or plus expense. This will basically either add income or add the groups for expenses on the page. So in this example, I'll be choosing income. We do support the SEISS payments. As I say, we are fully compatible or compliant with HMRC requirements. So if you have received your grants during the year, then you can include them in using the COVID support scheme entry box. But we're just going to switch over to sales and stick sales in of £24,000. So I'll click save, and they dropped into the tax return there at 24,000. Now I'm going to go and add some expenses. So I'm going to click the plus group. It's a little bit different here. You can choose the expenses groups. So I'm going to add in the car, rent, and accountancy options. So they'll drop in there, and then you can add each expense per category or per group following that. So I'm going to just add in fuel here now. So I'll click on car, van, and travel expenses and plus. Drop down menu for fuel and add in £2,500. As well as fuel, I've also snapped to car insurance, use of home allowance, and software included in there as well. But as easy it is to overview the multiple expenses there with the total at the top, I've realised that actually fuel wasn't 2,500, it was 3,750. So all I have to do is press on the pen tool to edit, update the amount, and press save, and you can see there quickly and efficiently we have updated the fuel figure and the total expense figure. You've got a real-time tax due figure up in the top left, so just to the left of the income on the self-employed title, you've got a tax due figure, which every time you update something, it updates itself. So you've got basically a real-time amount due as and when you're including your income and expenses. This is the more detailed tax calculation and payment schedule page. We will start on the bottom left at the view tax calculation. This is basically the overview of tax calc. On my example, I had employment income, I had allowable expenses to reduce the employment income, self-employment income, as well as property income. So you've basically got the overall income figure minus personal allowance as you would expect in the calculation, and then it goes into calculate the tax on an I a little bit further down the line. That SA302 is available for download at the bottom of the reports page. It's just a little button saying download SA302 and you get a PDF copy of that. Looking at the top right, we've got the summary schedule, payment schedule summary. So top line is basically your liabilities. So you've got your tax liability, class 4 and class 2. The second line of the first two options is tax paid at source, so usually from employment or interest. Then you've got payments on account paid in the previous tax year towards this liability, which gives you the balancing amount of tax. And then you've got the payment on account, if calculated, to be added on. The two blue figures on the right hand side at the bottom are your payments due in 31st of Jan and also 31st of July if you have payments on account due. So it's fairly straightforward. You can do the calculation step by step to see where things are split. And then you've also got where things come off, and then the balancing payments and the payments on account with the totals underneath. So it's very intuitive, very easy to understand, and I would recommend it, of course. And if you are struggling, you've also got support. Support are usually 9 till 5, up until the point where it starts getting busy, December, January, and then we become flexible on hours, at which point we start 9 till 10. So 9 in the morning till 10 at night, you will have support available to you. You'll speak to Zia, our help bot, and then if you want to, just press chat now and go directly to us advisors on support. So all you do on that one is press the little red question mark that opens up, and then you basically go contact support at the bottom and ask the question what you need help with. So just to summarise now before we go into a live Q&A, TTA members receive a 20% discount. Basically get go to www.gosimpleTax.com/TTA. Non-members, take a look at the software for free at www.GoSimpleTax.com/tutors. And one-to-one sessions are available for free of charge if you want to contact leanne.ogden@gosimpleTax.co.uk, spelling on screen. I will do a poll in a minute if anybody would be interested in a one-to-one, a free one-to-one, and then we can basically get in touch with you and go from there. Hopefully it's been a lot of information basically presented quite clearly. Hopefully I've not rushed through anything. If you want me to jump through or jump back to any of the slides, let me know, and I can do that for you. So just going to pop that poll on your screen now. Would you like a member of the GoSimpleTax to provide you with a free one-to-one overview of the GoSimpleTax software? And we can basically, I'll just wait for everyone to do that as I start having a look at the questions asked. So let me just scroll up to the top. I'm struggling to scroll here. What's going on? Could you please go back to a previous slide in a minute as I'm trying to make a note on it, please? Yes. The receive a recording of the webinar via email you registered with. Right, okay. So we don't actually have to flick back there if you're making notes. What are RTI submissions has been answered for me by Leanne. Thank you very much. But just to explain, RTI submissions are basically real-time information submissions. Every time somebody is paid in a period, you are required, once again by law, to submit that to HMRC either by their own PAYE portal or by registered and compliant softwares. Let me just scroll down to the next question. Can you please clarify what you mean by losses used against other income? So in terms of when you are a sole trader and you make a loss, you can basically, depending on when you are in your business, so you either have opening year rules where you can bring it back to previous years. So basically, if you were previously employed, you decide to take a dabble at being self-employed and the first year goes drastically wrong and you make some losses, you can basically carry back those losses against income that has previously been taxed and therefore generate a tax refund. If you are a few years into your sole trade and you also have other income that you are taxed on, such as property income, or you could also be employed, I'm pretty sure. So if you are employed or have property income and tax is due on that, and you basically make a loss, you can reduce your taxable income by your loss. So therefore less tax due in that tax year. And then also if you are making losses, you can carry them forward and offset them against profits in the same business in future years. So you do get those benefits of the losses in the opening years of trading, basically. So usually if you are looking at going, incorporating, depending on whether you want that different liability in terms of do you want to be the same legal entity or not. If there's minimal risk there, then it may be beneficial to begin with being a sole trader, because you can actually, if you make losses, offset that against previous year's incomes or current year income if you're still employed. Hopefully I've got that in a little bit of a nutshell for you, so it's easy to understand. As always, tax is never easy to understand, I understand that, but I do try and make it as easy as possible when answering these questions. Any questions that you do have, then let me know, and after the webinar by contacting Leanne, and I can always get back to you if you want a little bit more in-depth information on that. I'm just trying to scroll now, but it keeps disappearing as I'm trying to scroll. There we go. So yes, sorry, still don't get RTIs. Surely your income is your salary if you're a sole trader. Yes, if you are a sole trader, then your income is your income, and therefore, technically, in inverted commas, that's your salary. However, you can employ people as a sole trader. So if you bring on, let's say, an apprentice as a sole trader, you'll still then have to pay them per their salary and submit them RTIs. On the other hand, to get paid as a limited company, you do need to register for payroll and pay yourself a salary through RTIs. So hopefully that actually explains it. So the RTIs are if you hire staff as a sole trader, whereas as a limited company, it is relevant straight away as soon as you start paying yourself your director's salary. Why would you have less free time as a sole trader, less admin after all? Basically, in that point, it's from the point of going from a employment status to a self-employed person. You're basically looking to grow your business as quickly and efficiently as possible. So, in my opinion, if you are becoming a sole trader, previously you were in employment where you were working 9 to 5. As a sole trader, you're looking to constantly build that business straight away. Therefore, you may not be working 9 to 5 anymore. You may be working 9 to 7. It's just a generic point of saying previously you were probably on timed contracted hours, whereas once you become a sole trader, you could effectively work in longer hours because you're trying to do it for yourself. You're trying to do your own business. I understand that even when you're employed, you don't work 9 to 5. You could be working overtime, etc., or longer hours. But it's just a point to say. I was basically plucking things from thin air, saying you will have less free time because in that situation, you are trying to build a successful business. Hopefully that makes sense. How will the presentation be available? Yes, it will be available to everybody. You'll all get a video copy of the webinar tomorrow via email. Next question, as being limited, if you would leave money in the business, this wouldn't be taxed the same way after dividends and leaving profit in the business and reinvesting it in the business. Wouldn't that make it better on tax than doing this while being a sole trader? So in terms of keeping money in the business, it's a completely different thing. It's a case-by-case basis. As in my examples, I did say that I was extracting all profits. So in that instance, they were my examples. If you wanted to leave money in the business and reinvest it in the business, then that would be a case-by-case thing because it would depend on your profits. It would depend on how much you're leaving in. So as a roundabout way of answering that, it is a case-by-case basis. But if you are a sole trader, you are taxed on all profits. Therefore, it's only fair to compare as a limited company if you are extracting all profits. I did say that it was an advantage that you could limit this, but overall, when you're doing like figures and calculations, it's always best to compare from a like-for-like basis, because otherwise you could say profits were X amount, I only took half of them out, and therefore I've got half in the business. But then you've got complications later down the line if you do that for a few years to see, because then you've got to start looking at the trading status of the company. If you've got lots of cash in your business and you've got no plans for it, then you've got to start looking at the trading status of the business, because it could literally just be a company full of cash, and therefore that complicates things then again even further. So in my example, I just thought I'd mention your tax on everything as a sole trader. Therefore, let's get taxed as everything as a limited company and see what the comparison are on figures. Moving down the line, we've got a few more questions. We've got from 2023, is tax payable quarterly or is it just for a record? So assuming you mean for MTD and sole trade, no, the payment dates will still remain the same, 31st of Jan and 31st of July if you are on payments and account. There may be scope to change these later down the line, but at this moment in time in legislation, nothing is mentioned whatsoever. So don't worry about the quarterly payments at the moment, but I do believe that they will bring it in at some point. At the end of the day, they want their money in as soon as possible, and therefore they will literally change the rules in a couple of years' time. Once everyone settles down and gets the quarterly reporting basically under the wing, let's say, so they're doing it correctly, then they'll probably say, right, okay, now that you're doing it properly, we can start taking payments quarterly as well, and that'll be a big shake-up again. Also to mention that MTD for limited companies does come in, but it comes in a little bit later, and that's why I've not mentioned it. I believe that the MTD for limited companies is coming in 2025. So if you do incorporate to avoid MTD, you'll only be avoiding it for a year or two, as then MTD will be coming in for limited companies. How much does it cost to use GoSimpleTax? We at the moment, as a full subscription cost, it's £49. However, if you are a TTA member, then you do get that 20% discount by using the links on screen. If you use the /TTA link, you'll basically register, and in a separate email, you'll get a code to use when you go to pressing the Pay Now button. Use that code and it will reduce the discount by reduce the fee by 20%. Do you have to register as a sole trader for property income? No, you don't have to register as a sole trader for property income, but you do still need to register for self-assessment. If your only income is employment and property income, then yes, you have to register for self-assessment for that. It is still a property business, but there's slightly different rules with sole traders of self-employment and property income, as there isn't class 2 and class 4 or NIC at all on the property income. Next question. I pay a franchise fee each month. Can I add that in via GoTax, and does it count as an expense? A franchise fee, as it is relevant to the business, yes, it is. You're basically paying a franchise to advertise as their company, aren't you? Or their tutor. So yes, that is allowable for your business. Should I be charging VAT as a sole trader in tutoring? That is a question of, are your profits over £85,000? If your profits are over 85,000, then you do need to register for VAT. That is a whole other topic, and I would recommend getting in touch with a professional regarding that. If your business is under the £85,000 turnover limit, then there isn't any requirement to, but you can voluntarily register for VAT and start charging VAT on your tutoring fees. Next one. Can you give us a typical scenario as to how it would be beneficial to be a sole trader rather than a limited company for a tutoring agency? That is literally not something that I can just pluck out the top of my head. I may be able to get back to you on that one, but it would potentially be seen as giving some sort of advice. So I will need to just double check on that one. But if you get in touch with Leanne, whoever's asked that question, and I'll get back to you on that one separately. And then we've got, what about the accounting fee? Does the GoSimple fee of £49 include Sage 02? So basically that £49 fee doesn't include Xero or Sage, and it isn't a per month cost. That is just the annual cost of a tax return to be submitted. So you'll have to pay for Xero or Sage separately, or alternatively, you could use GoSimpleTax invoicing to do your sort of bookkeeping, as that is a similar accounting software which we provide. So you can send out invoices on there, you can track your expenses, you can track your income, you can follow up with different people. In terms of who owe you money, you can chase all your invoices all through GoSimpleTax invoicing, and that is what we are basing MTD off in a couple of years' time. So if you get familiar with that now, then you'll be ahead of the time in terms of that. So that £49 fee is just annually per tax year, and doesn't include Sage or Xero. That will have to be done separately. But we do have links with Xero integration if you are using Xero separately for your accountancy software. But GoSimpleTax does do that element of things through invoicing as well. We have got a couple more questions. What about CIC? What does CIC stand for? If anybody can enlighten me on that, and I'll let you know if I've heard of the differences in that. And then, is it better to register as a limited company or CIC? Once again, whilst I wait for what CIC is, I've got one more question of GoCardless integrated too. GoCardless is not integrated, I believe. Let me just double check actually. But we do integrate with SumUp. So let me just double check what our integrations are. I can tell you live whilst we're on this call. So within the self-employed pages, you've got Free Agent, you've got FreshBooks, you've got QuickBooks, you've got SumUp, and you've got Xero. We have got a couple of more integrations coming, of which I'm not sure whether GoCardless is included, but what do you call it? The rest are currently integrated and you can be used on GoSimpleTax. So if you do use FreshBooks, QuickBooks, Xero, SumUp, or Free Agent, then you currently can connect. So hopefully that's helpful for a few people. And a community interest company. Let me get back to you on that one, Marie. Let me see, have you asked all the questions in terms of that? Yes. If you just email Leanne that question, and we can come back to you on that one, as I'm not familiar with a community interest company. So I'll have to go away and have a look at that and then come back to you on that query. And then hopefully that's everything. Oh, we've got another question. I'm already with an accountant. Can I switch in April and get the 20% discount? Yes. Marie, you can literally anybody who signs up using the /TTA, you can get that discount. It is part and parcel of the partnership with the Tutors Association. If there's any more questions, I'll be happy to answer. There just seems to be thank yous. So thank you very much to the Tutors Association for letting us do this webinar, and thank you everyone for listening. Hopefully I've not bored you too much. I can tell there's a lot of information to take in as well. So hopefully when you do get the copies of the webinar, you can flick through and have a look at it again. But any questions, once again, direct them to Leanne. Leanne will pass them on to me if relevant. Other than that, hopefully it's been informative. I'm just going to leave it a couple more seconds, and then I'm just going to end the webinar. Oh, and thank you everyone for asking questions, because it's very few and far between that I actually get a webinar where people ask questions. So thank you. Okay, I'm going to end the webinar now. Thanks everyone.